And at the end of this video, I need to show you a short video that my girlfriend Jane took on the mean streets of Detroit. That's going to be at the end of this video. It's like this. You are being told that the economy is so strong. They point to things like the low unemployment rate or the high stock market, neither of which actually feeds into the economy. But there are a few bright spots. We recently saw the strongest gain in business activity since April 2022. Granted, okay, there are a few good spots, but I've been known to be a little bit like a wet blanket. So this is from the Administrative Office of the U.S. Courts. These are bankruptcies. You'll see that there's 7 straight increases in a perfect trend going higher. It's slow, measured, manageable, maintainable. It's the same with stocks. I always tell you that if you want to see a stock going higher, you want it to go up slowly in a measured and consistent way rather than a huge jump higher, because that's most likely to come back down. Speaking of the stock market, here's a chart of it, and I'm going to tell you what I said before the dot-com bubble. I said, this market cannot continue on the same trend. It's an impossibility. I'm not saying the stock market is going to crash because it's been going up so strongly. I'm saying that this trend it's on is going to change in any number of ways, but it's not going to be in the same trajectory. And you'll notice the move from mid-November. I always tell you that it's about the speed of the move more than the destination. Things are moving much too fast right now with inflation and all these meme stocks. Here's a chart of GameStop just to show you what's going on there. Here's a chart of DJT Media showing you Donald Trump's meme stock, how it's doing. But what's driving all of this activity that's going on, all this investment strength? It can't be the low interest rates, because they're not low at all, so it's definitely not that. I don't know. Let's take a look at this chart. This is M2 money supply. Here's all the money they created to pay our deficit in our current account, to pay our overages for the things we spend beyond what we can afford. But anyway, here's a chart from the Bureau of Labor Statistics. This is unemployment. And I'm telling you that unemployment will start going up pretty markedly as we approach and enter the recession. But here's a chart of credit card delinquencies. This is from the Board of Governors of the Federal Reserve System. Just looking at all these incremental numbers and data points, I just feel like we're in the absolute middle of what's feeling like an incredible and historically relevant blow off top. This is from the Bureau of Economic Analysis. This is American GDP, gross domestic product. And you'll see that it's positive, so that's a good sign, at least it's positive, but it has been falling in the last 3 reads. And remember, quarter 1 was 1.3%, and as I told you then, that GDP got a boost both from government hiring and military spending, and even the increases in GDP from precious metals mining. Without those additional influences, we might have been back in recessionary territory, just like we were in quarter 1 and quarter 2 of 2022. This is from the U.S. Department of Labor. It's a 4-week average for jobless claims, and you'll notice that 7 of the last 8 reads were all rising. Expect this trend in jobless claims to continue. From the Bureau of Labor Statistics, this is the JOLTS, the job openings, and it's sliding pretty quickly in the last 3 reads. The job openings are clamming up. But here's one you always have to watch. This is from the Bureau of Labor Statistics. It's the youth unemployment rate. And at 9.2% right now, it's the highest it's been this year. And you've heard the expression that idle hands are the devil's workshop. That's what they're talking about with youth unemployment. Whenever youth unemployment gets above 20%, there's a massive spike in violent crime, vandalism, burglaries, all sorts of things. You do not want the youth to not have something to be doing or a way to earn a living. It gets pretty bad pretty quickly. History has shown us this in many countries all over the world. America will be no exception. And this is from the Federal Reserve. This is U.S. mining production. And mining production has been declining slightly or growing very anemically, and producing less, but the prices of the metals that they're pulling up are much more valuable now. That changes a lot of things. And watch what happens. Here's a chart of gold. And you're going to see how they now are going to be reporting quarter 2 in the middle of July. Those should be some pretty good numbers, in my opinion. But a lot of companies are doing pretty well, not just the miners. A lot of stocks are going up. A lot of those companies that make up the stock market are doing pretty well. Earnings are increasing. Take a look at this 10-year chart. This is from the Bureau of Economic Analysis. this is corporate profits. And from the Federal Reserve, here's industrial production. I would describe this chart, if I had to describe it in 3 words, those words would be ugly. I also want to show you the U.S. Richmond Manufacturing Index. This is from the Federal Reserve of Richmond. You pay attention not only to the fact that 9 of the last 12 months have shown a decline, but also the total magnitude of those declines compared to the increases. The weight of the ink on the chart. But the U.S. Bureau of Economic Analysis wants us to see real consumer spending quarter over quarter, and this is absolutely anemic, especially for an economy which is driven 70% by consumers. Also, the spending levels which fed into the information for this read, they were on a bunch of products which were at inflated prices. Those prices are now coming down, which can mean an even lower consumer spending read next quarter, all other things being equal. Here's a 5-year chart of the Consumer Price Index. But you have to love the government. What they do is they say, well, all these things are costing more, and it's reflecting that in the CPI. But inflation and food are too volatile, so we're just going to strip that out. It's kind of like unfunded liabilities. Well, that's not debt. That's just something else. So they strip out energy and food prices, and there's your core inflation rate. But from the Bureau of Labor Statistics, you guys have been hearing a lot about increasing rent prices. And you'll see it slides lower every month. Lower, next month lower, next month lower. It reminds me of this clip from Office Space, one of my favorite movies.
Ever since I started working, every single day of my life has been worse than the day before it. So that means that every single day that you see me, that's on the worst day of my life.
What about today? Is today the worst day of your life?
Yeah.
Wow, that's messed up.
This is from the U.S. Census Bureau. This is new home average sales price. And this is from the National Association of Realtors. It's a 5-year chart of existing home sales. But I'd be remiss if I didn't include the S&P Case-Shiller Home Price Index, Standard & Poor's. This is a 5-year chart. And from the Organization of Economic Cooperation, this is the price of a house to the rent ratio. And you can see it's been quite a climb as home prices get comparatively more overvalued. Compared to rent, it will make the number climb. I also want to show you from the National Association of Realtors and try and put all these pieces together. This is a big story. I want to show you surgical, tactical points, and then you can understand or decide for yourself what you believe is going on. But you know how I always tell you about how the supply of homes will heal itself organically? This is total housing inventory from the National Association of Realtors. And it's climbed in 5 straight reads pretty quickly too. There's nothing suggesting that this will not continue on that pace. We are in a capitalistic society. If there's money to be made because there's demand for housing, then there will be a lot of houses being built. Businesses are always trying to find more money. They're trying to make money. And if there's a demand, they fill that demand. It's a capitalistic society. What I'm telling you, I've told you before about how if there's a bunch of wolves and they overeat and overhunt all the deer, then the deer population falls. And then the wolf population finds that food is fewer and further between each meal. And all of a sudden, the wolves start starving off. And as they starve off and their population gets smaller, the deer find more ability to flourish, to mate, to breed, and all of a sudden the deer population increases by a lot. They adjust. It's capitalism, and it'll solve every single problem that we're dealing with in the economy today. This is from the U.S. Census Bureau, construction spending, another ugly chart. And I also wanted to show you that the Dallas Fed Manufacturing Index is all negative. And I got to show you this one more time because it's such an unbelievable chart. This is the M2 money supply from the St. Louis Fed. I didn't even know that charts could be drawn in this manner. But in all of this, what is happening to consumer spending? This is from the Bureau of Economic Analysis. This is consumer spending. And at the end of this video, I need to show you a short video that my girlfriend Jane took on the mean streets of Detroit. That's going to be at the end of this video. There's a lot going on right now, especially in southern Lebanon. I hope you guys are watching that. That's going to change everything. It's so much bigger than anyone is recognizing. This is going to bring 8 different countries into the war immediately. But I digress. And if you want to keep on top of this stuff and communicate with me directly, then you're going to want to look into becoming a Peter Leeds insider. You can learn all about that at peterleeds.com.